Greetings, sailors. I'd like to welcome you to the latest version of the Navigare webinar series. I'm super pleased to have the founder and CEO of Navigare Yachting with us today, Jesper Rangard.
Thank you, Philip. It's great to be back in the States and in St. Pete. We had a bit of rain and wind yesterday, but now the sun's back, and it's really amazing to be back here in the US and experiencing all of your get it done mentality. It's just such a drive and energy in this country. It's just fantastic to be back. So thanks.
All right. First, a couple of exciting things happening in the industry over the last couple of weeks. As you may have heard, the BVI has opened up, or they've given out their protocols to allow us to get back in and sail. We'll have to take a COVID test before you go, one on arrival, one at 4 days, but you will be able to get on a boat and travel through the BVI, and no real hard lockdown quarantine. So that's, we were afraid of that. Looks like that has been taken out. So if you do come sail with us this year, you'll greet us at our new base in Nanny Key. Again, the premier resort in the Virgin Islands. We're super excited about being there, as many companies have been reducing in size. We were able to move our expanding fleet from Village Key, where we outgrew it, to Nanny Key. Really excited about that. Now, the Bahamas. For those of you who have been following us, you know we are opening a base in the Bahamas. It's on schedule to open December 1st. Really no quarantine at all now in the Bahamas. You take a test before you go, and then one at 4 days. That's it. And that's you will have to fill out a questionnaire and post it before you travel. Really easy for the Bahamas. I'm excited. I'm just getting set to do that right now. I'll be heading down there on Monday. As we've been doing these webinars, one of the most exciting topics and really one of the most attended has been on the financial side of placing a yacht in a charter fleet. So we have a great program. We're very excited to have Gary McKinley with us today. We'll tell you more about Gary in just a little bit, and the firm he manages. But Gary, as an estate planner, and his team at McKinley and Associates have taken an interest in investments that allow their clients to grow their wealth while maximizing the lifestyle that it affords. So very unique take, and we're very fortunate to have Gary here with us today. Now, we welcome any questions you have. We're trying to keep this to our 30-minute time frame. So find the chat button. You may have to click on 3 dots to get to the chat button. Open that up. We'd love to have you say hello to us, and you'll type your questions in there. We're going to try and save enough time for a few questions at the very end. Before I introduce Gary, I'd like to take a moment to talk about a couple of the common types of programs that our investors are using to enjoy sailing. So many investors are looking for tax planning benefits. So we have a program, our shared revenue program, the Ultimate, that offers typically the highest returns and allows for those tax planning advantages. For sailors that don't really have a tax planning need, want to get out and sail, enjoy boats, make some money, the Guaranteed Revenue program, our complete program, works great. We have a Smart program that allows you to get in with a lower total investment and have the boat completely paid off at the end of the term.
And of course, enjoy some sailing while you're at it.
And all of those programs, yes, that's the key that puts this all together. So, Gary, thank you again for taking time to discuss some innovative ways to finance boats in the charter fleet. Can you start off by telling us a little bit about yourself and your company?
Sure. Thanks so much to you both for having me, and to the audience, welcome. I'm far from anybody polished as these two are on camera or online, but I'll do my best to help any way I can. My background, frankly, is twofold. One, I was a teacher and a coach and an educator for 25 plus years, and the last 25 plus years I've been still a teacher and a coach, but in the area of finance and the financial services industry. So we've got a firm up here in Ponte Vedra Beach in Northeast Florida that's been around now for 25 plus years, and we love Navigare. We love the fact that it's another alternative investment that can produce income on a tax favorable basis for our clients, and also create an opportunity to continue with the lifestyle that they've worked so hard to grow accustomed to. So happy to be here, guys.
All right. Thank you so much. Gary, most of our investors choose to take a conventional loan at around a 5% interest rate. For those with a nice portfolio, you might have an alternative plan that seems to work well. Can you tell us a little bit about that?
Yeah, sure. So for many years now, working with both the wealthy and the ultra wealthy clients across the country, we found that something called OPM, which stands for other people's money, the use of it can be a unique opportunity for folks to continue to improve their lifestyle and legacy as they're working to create their plan. And just as an example, we use the taxability of what we call premium insurance or premium financed insurance, where we actually take a bank's money to pay $3 or $4 million of premiums in 5 years and create an opportunity where there's now an asset that's 3 times that value in 10 years. So there's some unique tax benefits and legacy planning and arbitrage, because today's loan rates are obviously at historical lows. We haven't seen interest rates this low in forever, and I don't know that we'll ever see them again. So it's a great time to be involved with Navigare and to create opportunities where you can have other people's money work for you. So in your case, as you know, some you go to a bank, you might have a loan for. We have opportunities where if you have a substantial portfolio, you can get down to an interest rate of between 1.5 and 2% by strategically placing your assets in a position where the bank and or the custodian is able to give you that type of loan rate. And then the arbitrage, and the beauty of that is we kind of take the bank out of the picture and continue to grow that money at hopefully 6, 7, 8, or teens, depending on what type of portfolio you're in. So the arbitrage between that loan rate and what you're able to earn is improving your lifestyle and improving your actual balance sheet. So it's a unique opportunity for sure.
Wow. So if I understand correctly, someone can get a loan off their portfolio at a very reduced rate. That portfolio continues to earn at the rate it's earning at, and then the loan would be at a significantly lower rate. So the difference then would be the difference in first the interest rate plus the amount that the fund is growing, or those funds are growing at.
Yeah, absolutely. I mean, you've got additional. We have some clients that like to use even their Roth IRAs. A lot of people don't realize that you can actually use that as a collateralized loan and get that low type of rate. And because we're a small boutique wealth firm, we have unique relationships with these banks and custodians. You couldn't go to a normal big box firm like a Merrill Lynch or a Schwab or someone else and do that sort of deal. But because we work with the private investment world, we're able to do that for our clients and partner with you guys to make those opportunities.
Yeah, wow. Wow, Gary, it sounds pretty amazing. I thought that even, our programs work pretty fine with the 4 or 5% interest rates, most people think. So when you're starting talking about that kind of interest rates and your money is still working at the same time, it just sounds very, very exciting. Perhaps you could even explain a bit more about the technical side of this, how that is an arbitrage. You're talking about arbitrage, how that is an arbitrage structure. Could you elaborate a little bit?
Yeah, so just think of it as a simple numbers. If I have $100,000 and I take a loan out, or let's say $1 million, and I take a loan out against that, I can take anywhere from 50 to 70% of that loan against my own collateral that's invested, and it'll continue to grow. So if it grows at say 10% and I'm at a 2% loan rate, I'm still getting 8% on my money, but I've got $1 million yacht that I'm cruising around with and also getting income through your program. So you start to compound those numbers and it gets to be pretty interesting.
Yeah, that's very, very exciting, combined with both our ultimate or our complete programs, which you could then leverage that and get another, roughly another 10% on your money. That's very exciting.
Absolutely.
Plus, of course, what is most important here, and we keep perhaps forgetting to mention that, and then you got your sailing time and all the time you spend aboard with your family and friends, which we really want to talk about too.
Yeah, I think you guys need to share, how passionate, your clients are about sailing. It's just to be able to get out on the water with your families and create that legacy. Those memories that are created are you can't put a value on that. And that's why I love what I do, and I know it's why we've partnered so well together, because we want to make a difference in our clients' lives, and if we can improve not only their balance sheet but their lifestyles, what a wonderful thing.
Yeah, well, I was going to say, as a kid growing up, I played soccer. I lived in England and played soccer. Fortunate enough to play until my mid-50s. You're passionate about soccer too, and you've been able to take some of that passion and make it a little bit of work too, and that's kind of plays right into what we're talking about. Your passion is coaching soccer, and you've been able to do that somewhat professionally as well.
Yeah, absolutely. I mean, one of my goals growing up was to become, one of the top coaches in the U.S. And to do that, you have to become a member of the national staff with U.S. Soccer. So that was a goal that I was able to be fortunate enough to be part of and help with. And then when I got into this industry, my goal was to be on the national team with regards to helping people with their balance sheets. And so I've been able to be a member of the $1 Million Roundtable for many years now and help many, many people. So, but my passion for soccer is pretty large. I'm very similar to the rest of the world when the World Cup comes or when my favorite teams are playing. A lot of people know that if they see my door is closed in my office and they hear a little bit of noise, they know better than to open the door and interrupt, because they're very happy or very sad.
Well, it's a fantastic story, and that passion is fantastic to hear, and I mean, I can join into that. Really, sailing really is my passion. It helped me put myself through college as a charter skipper in Greece back in those days, and I was fortunate enough to be able to turn that passion into a profitable company. That have been, yeah, it's been a fantastic journey over the last 20 years. And it's really exciting to hear how, again, how our passions and your offering can really benefit our buyers in a way I didn't imagine possible.
Yeah, there was a question I saw in the chat about using an IRA versus a Roth IRA as collateral, and they are correct. An IRA cannot be used as collateral in this case. However, what we love to do is to help people move an IRA or convert an IRA to a Roth IRA, which, again, 101 in savings and growing your money. Roth IRAs grow tax-free, and they money comes out tax-free. So if you have an IRA out there and you're thinking you want to use that money to buy a yacht with Navigare, there are strategies to offset the tax and move that into a Roth IRA and then still get those low loan rates.
Wow.
And be able to make a purchase. So don't worry if you're thinking of using IRA money. There are ways to strategically position that.
Fantastic. I mean, I kind of get a feeling that it's typically hard for financial planners to find the fun part of the investments. I mean, there is a lot of programs offering good kind of returns, but to find a program where you can add some lifestyle benefits.
Yeah, absolutely. I mean, we have we've worked with we have a program where we work where we have financing with a bank and a program for jets, for example, for our clients. And there are opportunities that we work with that have to do with wine, have to do with art. We really like the private investment place, much more so than just the public investment place. There's so much volatility and uncertainty out there right now with the market that, if you can find investments like Navigare and other alternative investments where you're not directly correlated to the market itself. There's a little inside joke amongst us that work in this space in that, publicly traded funds, you can't talk and you can't find, the secrets out about what's going on insider trading and so forth. The nice thing about the private market is, it's kind of an old joke, but we talk all the time because we like to know the insider information, our investments and our money. So, again, it's serious stuff, but at the same time, there's certainly an opportunity to have some fun. And I would much rather be out on a boat with you guys discussing this type of stuff than here right now, but we'll get there.
I agree.
Are there ways to invest with pre-tax funds or with funds that remain in a tax-deferred portfolio?
Well, yeah, once again, there's some pretty strict rules when it comes to the money that you've put away without paying taxes that you have to be aware of. And of course, we've got the background and the experience and the partnerships around us with our back office to make sure that if that is an asset that we want to take advantage of in this type of purchase, then there are some different things that we can look at. But that's a longer conversation, not to avoid your question, but I don't want to get too complicated because everybody's situation is going to be a little bit different. But I just want people to know that there's trillions of dollars right now of pre-tax money out there, and I think the biggest fear that many of us have are that taxes are also at an all-time low. And so the chances of taxes going up here in the next 10 or 20 years or sooner are very high because of our national debt and because of the other things that are going on. So I think, again, finding prudent private investments like Navigare, and then also dealing with those monies that are pre-tax, being more proactive is certainly the way to go.
Yeah, yeah. I think you're freezing just a little bit, but I think you unfreeze and we get the end of the statement.
Oh, I'm sorry. Yeah, I'm coming from my house here, and I had to jump away from something else. But if there's anything that didn't come through on that, just ask me again, and I'm happy to repeat.
Okay. We have a few minutes. We're actually doing exactly on time. This is the first time we've ever held to a schedule on one of the webinars, so very exciting for us. Your information is good, and I want to remind everybody, if you have questions, find the chat button, type your questions into the chat, and we'd love to answer a few. As a matter of fact, I believe we've answered the question regarding a Roth versus traditional IRAs. Question, are we seeing inflation or deflation in the boat market? I'm not sure what that means. I can tell you about the market. I can tell you about boat pricing. But Gary, is there something that maybe you pull out from that question?
Yeah, I think maybe what they're talking about, for example, a lot of people I know, when they look at just say an average purchase of an automobile, for example, the value drops so dramatically during the first part of after the purchase. The thing I think they're looking for here is the resale value at the end of 7 years and how your boats hold their values so well. I think that's important to investors because, again, that gives them the opportunity to, if they have to use a bank loan, to pay off that bank loan, or if they want to redeploy that money that they've been using as a loan to some other investments, they still have the chance to do that without having a great deal of lowering of value, I think is what they're getting at.
Yeah, well, after listening to you, I don't think we're going to have as many people doing traditional loans.
Well, it's certainly another avenue. I mean, again, everybody's situation is different, but I think whether it's the bank loan or the use of existing assets, what a terrific opportunity to improve your lifestyle and to really make some memories. So, yeah, we're happy to work with you guys. We think it's going to be a great strategic partnership.
Yeah, we're starting to get a ton of questions here in at the same time. Some of it is related to one here is real estate. If you could use real estate holdings as collateral as well, and the other one is more, I think, related to what you have described in terms of your portfolio. Maybe we want to just circle back on the same thing, making sure that everybody is on board with the big picture structure.
Sure. So again, what we're talking about here is typically a lot of people have their wealth actively managed, by CFAs, and we manage those managers. And we have some unique benefits in the private market where we can get, again, interest rates. The more wealth that you have invested, the better we can negotiate the actual loan. So, we've seen, let's say you have a couple $1 million set aside in an actively managed account, that when we're managing that through our partnerships, we can get a loan rate, for example, of 2% plus LIBOR, so about 2.1%. And thereby, because we're using your assets or our own assets as the collateral, we can continue to grow that and manage that and target whatever rates of return we would like to target. We also put circuit breakers and different things on those types of accounts so that, you know, if there was a sudden drop like there was in March or April, whether it's a recession, a correction, or a bubble, you can still protect yourself and protect those assets, and also protect yourself from rising interest rates and you know, changes in terms of bank loans or renegotiating those loans with banks. So you really are taking more control, and you are creating more flexibility in the way that you want to structure the Navigare deal.
And you mentioned 50 to 70% of your portfolio might be. There was another question just came in here. So typically on that $1 million portfolio would be able to borrow maybe 500,000 or 700,000 based on that portfolio.
Correct. So they would look at, yeah, that portfolio and also your net worth, and they would make, you know, we would do a negotiation to work to get the lowest rate possible. But also, for example, if you have a larger portfolio, for example, if portfolio were more like $5 or $10 million or more, then we can even get down into the, you know, 1.5 area as far as rate is concerned. So again, it's all negotiable. You know, it's just a matter of making sure it's going to work for the client, most importantly, in terms of what they're trying to accomplish.
I'm going to paraphrase a question from Patrick, basically, what effect does this type of borrowing have on the funds that we pay out as revenue? Does that affect the taxability of the revenue they're earning from the investment with Navigare?
Yeah, no, that's a great question. So ultimately, at the end of the day, where we kind of have our focus is, if you were to look at our clients, for example, which are the same as yours, and this is why it works, is you know, if you're between, say, 50 and 80 years old, and you're trying to get income on a tax favorable basis, you know, strategically doing that is probably one of the largest challenges people have. So through the Navigare program and the depreciation program, and working with CPAs, and then also looking at strategically targeting a specific income level that people want to be at for the remainder of their lives. This all goes hand in hand, so that, again, we can not only improve the balance sheet and the strategic income, but also the lifestyle. So great question, though, and that's something that we work very hard at. I mean, I love creating tax-free income. I love creating some deferred tax income, and then I, you know, not so much love just deferring tax. But I think, you know, we all want the same thing, and working together strategically with this as an alternative investment, along with some other things in the private marketplace. It's really amazing how much leverage you can really accomplish these types of things.
Yeah, and from Jim was asking about first of all the ways to invest. One is just straight cash investment off a portfolio, bank loan. Those seem to be the common three that that we've been working with. Now you've given us a new opportunity, and the follow-up to that question is the assumed interest rate and the return. And I'm just going to tell Jim that on the mid-sized catamarans, typically the guaranteed program is going to be somewhere around 9% of the value of the boat, and that's per year, and we'll guarantee that for up to 7 years. I think we have the longest term of any company in the industry. We certainly have among the highest return rates. And that's just the beginning of a great investment with Navigare. Certainly, the quality of our bases, I'll put up against anybody. So that does not account for the interest rate. So if you have a 4.5% interest rate, well, that takes half of your return. By being able to lower the interest rate, then that increases the profit. Are those the ways of finding that $500,000, $1 million for the investment for the boat that you see as well?
Yeah, what I really like when I look at your different pro forma models is the way that you factored in the operating costs and the depreciation. I mean, you know, a lot of my sophisticated investors that I've shown the program to really raise an eyebrow when we start to get into the numbers in that regard. So I think it's, you know, it's something that people should, you know, really look at carefully from an income and tax favorability standpoint. But I think, again, they should work with surround themselves with a strong team like us and yourselves and CPAs and sometimes even the tax attorneys when it comes to legacy planning, because, you know, again, what we also try to do is plan for the transfer of wealth. And, you know, if your family's been out on a boat for years and years and had all these great experiences, you know, they may want to hold on to that boat and they may not want that yacht to go anywhere but inside of the family. And there are certainly ways to transfer wealth using that as part of the tax favorable transfer of wealth. So that's another avenue that they should be thinking about.
Yes. We got another here from Jim on examples of a portfolio return, including the interest paid on borrowing on the account along with the boat value at the end. And that's there is, of course, then that's a combination of our services here in that question. And from our side, we are talking about our complete program, as Philip is mentioning, where we got approximately 9% return, or the variable ultimate program, where you typically reach a bit higher, maybe 11 or so is a more typical return. And then, of course, you have your cost of interest rates, and that's where this becomes so much more exciting here with Gary's program, where the interest rates goes down substantially. So even considering if you were borrowing the whole value of the boat, you would only be looking at, let's say, we don't know for sure, but let's use the number we're talking about here, the 2%, which would leave 7% on a guaranteed program, or even 9% on a variable program as your return, which could then be used as depreciation towards the boat. And we know for sure that the boat value after 7 years is way above 50%. So you are going to end up in a very positive, the calculation is going to be positive on your yacht. Exactly how much, I'm not sure I dare to say, but I mean, currently we are selling catamarans at about 70% of their initial value after the charter period. That could obviously change depending on the market situation and so on, but that's just kind of for the moment, the rule of thumb. And it's also so there is it would be possible, very positive only from the investment perspective on the boat side, and then you have the portfolio on top of that, and your sailing time to mention as well above.
Yes, we got away from the sailing time a little bit, and you know, based on the past webinars, we've determined that for those who qualify, the tax advantages can be very substantial. And we've also determined that even the guaranteed returns are very strong. Again, the return is on the value of the boat, not the money that's necessarily put out for if you put down a 20% down payment. So the return is very good. Up to 12 weeks of sailing per year is definitely a bonus. And for those of you that want to trade in some of that sailing time for land holidays, we've made huge leaps and bounds with our association with Third Home. For those that want to stay in nice homes around the world. And now we understand from Gary that there's a way to take all this magic and increase on it. So it's pretty exciting. And Gary, really want to thank you for your participation today.
Sure, absolutely, it's my pleasure. We're here to help any way we can, of course, as you know, and you guys know how to get in touch with me, and let us know if there's any other questions people have. They can certainly email, and we'll make sure we get those answers back to them if I didn't cover something.
Fantastic. Yes. So what we'll do for everybody who's registered, and you have to be registered to be on this call, you'll receive the recording. And we'll include Gary's contact information, gary@mckinleyandassociates.com. But we'll include that in the recording. So for those of you that don't know, we have charter auctions. Super exciting. Had one last night. It was really fun. But we've got some great prices on charters in an auction setting. So love to see you on those. You can go to the bit.ly/charter auction to get registered for those. So Gary, thank you. Everybody participating.
Thank you, Gary. Thank you, Philip. Thanks for listening.
My pleasure. We look forward to seeing you out sailing. Bye now.